All right, today we're going to talk about the very unique and, let's be honest, aggressive Bitcoin strategy of one company in particular, MicroStrategy. It's a playbook that has everyone talking, and we're going to break down exactly how this machine actually works.
So check this out. Just the other day, MicroStrategy, their stock, MSTR, it jumped over 6.5%. A pretty solid day for any company.
But you gotta ask, right? Was that just a good day on the market? Some random luck? Or is it the predictable result of a really powerful machine working behind the scenes? That's what we're here to figure out.
Okay, let's start with the most obvious piece of the puzzle. This is all about that super direct, super powerful link between the price of Bitcoin and the value of MicroStrategy.
Okay, so this is where it gets wild. We're talking about some serious leverage here. For every little bump in Bitcoin's price, we're talking maybe $150. MicroStrategy adds $1 million in equity. Just think about that for a second. In a market like crypto that moves so fast, those millions pile up and they pile up quick. And that's why you hear stuff like this, because every single time Bitcoin ticks up, it's a direct shot of adrenaline to the company's balance sheet. It just feeds this whole positive cycle. And, well, it's definitely something worth a closer look.
So that begs the question, right? How in the world does MicroStrategy get its hands on so much Bitcoin? Well, that brings us right to the heart of their whole operation, what you could call their Bitcoin accumulation engine.
And if you want to understand this engine, you've got to know one key term: stretch. Basically, this is the company's secret sauce for buying up Bitcoin without issuing new common stock. See, they use capital, often from things like convertible notes, to just go out and buy Bitcoin. And for anyone who's already a shareholder, that's a huge deal.
And if you want to know just how powerful this stretch program is, get this. On a single day, they were able to suck up an estimated 800 Bitcoin for their treasury, just like that.
And this quote just hammers it home. See, it's not just about buying Bitcoin. It's about adding pure, raw value to the company's treasury for the shareholders without making their piece of the pie any smaller. That's the key. It's totally accretive.
Now check out this chart, because this is where you really see the scale of this thing. It's kind of staggering, actually. Ever since the last Bitcoin halving, MicroStrategy has been buying Bitcoin at a rate that's 1.66 times faster than new Bitcoin is even being created. I mean, think about that. They are literally pulling more Bitcoin off the market than is even being mined. So when you're accumulating that aggressively, that leads right into what the bulls call the MSTR advantage. This is basically a whole list of reasons why they argue MSTR is a superior way to get exposure to Bitcoin.
All right, let's run through these advantages. First up, you've got scale. I mean, they're the biggest corporate holder out there by a long shot. Then there's yield generation. They're constantly using their position to make more money to, you guessed it, buy more Bitcoin. Then you have what's called infinite optionality. Their Bitcoin is basically permanent capital, which gives them a ton of flexibility. And here's a big one for a lot of people: no management fees. That's a huge difference compared to an ETF or some other fund.
But wait, there's more. MSTR also works as this regulated global gateway for investors who maybe can't or don't want to buy Bitcoin directly. Its stock is super liquid, which means big institutions can get in and out easily. Plus, it's in all these major stock indexes, so it gets a boost from all that passive investment money. And, the brand itself is basically synonymous with institutional Bitcoin at this point. Huge recognition. So, look, when you stack all of that up, the scale, the yield, the lack of fees, the market access, the argument is that MicroStrategy is offering something totally unique. It's an investment proposition you just aren't going to find in an ETF or a trust or even by just holding the Bitcoin yourself. But this whole playbook, it isn't just about clever financial moves. It's really built on this deep, almost philosophical conviction about how revolutionary tech actually works in the real world. The idea at the very heart of this is pretty simple. Anything that's truly going to change the world, think electricity, think the internet, always goes through these long, painful phases where everyone doubts it, where everyone's a skeptic, before it finally hits the mainstream. And this is where that idea gets really interesting. People are looking at the 94 days since Bitcoin's last peak, and they're getting nervous. They're calling it a sign of weakness. But let's put that in perspective. Compare that to the 50 years of skepticism that held back the adoption of nuclear power. And this isn't some one-off thing either. History is just full of these long, drawn-out adoption cycles. It took something like 30 years for electricity to really catch on everywhere. And nuclear energy, it was stuck in a 50-year bear market, basically, all driven by fear. right up until now when we're suddenly realizing, hey, we kind of need this stuff for things like AI.
And this quote just ties it all together perfectly. The thinking is, if humanity can fight through 50 years of nuclear skepticism, then 94 days of Bitcoin skepticism is not something that we ought to be that skeptical about. I mean, in the grand scheme of things, a few shaky months for a brand new monetary technology, it's really just background noise.
So where does that leave us? It brings us to this really fascinating final question. You've got a company using its software business to power a digital credit operation that's just relentlessly accumulating a potentially world-changing asset. So what do you even call that? Is it a financial company? Is it a tech company? Or are we actually watching the birth of a whole new category of company entirely?